Hello, welcome to the Invest in Value channel. I am Victor, and in this video, I'm going to go over a corporate bond that is issued out by Pemex. This is the petroleum company that is operated in Mexico. It's owned by the government, but they provide a corporate bond. Before I jump into analyzing Pemex, the corporate bond, do me a big favor and like my video. Consider subscribing and hit that bell if you want to be notified on when I produce a new video. Also, I like to take my investments through a scorecard that I've put together, and it really looks at three things. First, am I getting a discount on the investment? Second, is the company operated well and performing well that is issuing out this bond? And last, is it the right time to buy this investment? So let me tell you more about Pemex. So Pemex is a fully diversified petroleum producer. It goes out and explores and finds oil. It extracts it, puts it into its overall supply chain, and has downstream operations where it creates gasoline, diesel, other products. It even commercializes some of the products it produces. So it's a fully integrated company, similar to a Chevron or an Exxon. It's just operated in Mexico. So most of Pemex's production is exported from Mexico. And the number one destination for its oil is the United States. We are a big consumer of petroleum, and the proximity of Mexico makes this their number one market for export. One thing that I'll cover a few times is they've really grown quite a bit. They grew 61% in the last quarter that was reported, which is their Q3 ended at the end of October 2021, but wanted to show what they're doing with their oil. Another thing I really examined is their debt, is it fixed or floating? And most of their debt is fixed. That's really good because interest rates have really gone up over the last 60 days. And I wouldn't want them to be caught in a position where they cannot, meet their obligations. But in this case, most of their debt has been fixed. Good news is they probably have a very good interest rate compared to the interest rates that are being issued out today. So they have plenty of cash that's being generated. I'll cover that in a minute, but it looks like their debt is pretty stable. Right, I took this bond through my valuation model to see if we're getting a discount or paying a premium on this bond. First off, there's 20 years remaining on this bond. So I'm looking at cash flows for the next 20 years. They have a coupon rate, which is the implied interest yield of this bond at face value being $100. And between now and 20 years, you're actually going to see the bond mature and pay you the full face value of $100, but you only have to pay $79.07 today. So that $20, you earn it a little bit at a time each year over the next 20 years. If I take those cash flows that I expect and provide a net present value, I get a $93.74 price. And that's more than the price that you would pay today. So it gives you a nice little discount of 20% if you bought this bond. It has a yield of 8.93, which is a very nice yield. And you can see, I put the yield chart here. The short-term yields are, 0.5 to about 1. And as you go to greater length of term, the yields go up. This one's kind of like in between the 10 and the 20. So it's right up here. It's performing well, better than the treasury yield. That would be at 2.827%. A yield of more than 8% is a very attractive yield, and you're getting it at a discount. Every year you hold it, you're pretty much building additional equity in this bond, and you will be paid $100 per bond that you own at maturity. So this is a very nice, attractive bond, the type of bond I'm looking for in my corporate bonds. So Pemex issued out these bonds, and I wanted to go over the rating agencies that cover bonds. One of them is Moody's, the other is Standard & Poor's. And Standard & Poor's has a triple B rating, which gives them an investment grade, medium risk bond rating. Moody's is not as optimistic about Pemex. They gave them a BA3 rating, which puts them in a high risk and junk grade, status. And I'm not sure I agree with them. And there'll be a couple of reasons for that. One is oil prices have really gone up. So oil companies just naturally have a lot more cash to pay their debts, to operate their businesses, to be profitable. So the increase in per barrel pricing really benefits Pemex big time. And the prices are well above $100 per barrel. I think they're going to stay there for a while. So I think the rating of it being a high risk junk bond, I don't think that one fits. I agree more with the Standard & Poor's rating of triple B. I think it is a higher risk than if you bought, let's say, a domestic bond here in the United States, because this is a bond issued out by a Mexican company that has other risks involved in it. I agree with that. But it is an industry that's really doing great. Oil prices are really high and oil companies are making a lot of money. Looking at the performance of Pemex, again, the last reported quarter was at the end of October 21st, and they increased, top line sales by 61%. And that's primarily due to the high oil price. Their production only went up 4.3% compared to a year prior, but it's all pricing. They are just making a lot more top line due to the high per barrel pricing on oil. They generated net cash after interest payments of nearly $5 billion in that quarter. So that was really good. It shows that they have plenty of cash. Bond prices have been going down. Yields have been going up. In 2022, there is a real big change in bonds. Bonds are pretty much doing nothing in 2021, 2020. They were pretty much a place where you didn't get much yield and your money was very, very stagnant. Meanwhile, the stock market was just flourishing, just going up so high. But nowadays, the stock market is really going sideways or going down. We're down more than 8% on the S&P year to date. If that continues, we'll be down 24% by the end of the year. Bonds provide a more stable alternative that will also give you a yield, and a yield that's more defined in 2022. The oil economy is thriving. So we're above $100 per barrel, and I don't hear any news that is going to take that price down for the next year to 2 years. The guidance the company provides is that they are getting $106 per barrel now, and it's likely to stay within 15% range for 2022. Might be a little higher, might be a little lower. The FY Q3 average barrel price that you see these numbers of 61% was actually at $62.75. So there's significant upside really stored in 2022 for Pemex. And they should have an abundance of cash flow, for 2022. So I'm optimistic that they're going to have a very good 2022 and several years to come due to the high demand for oil and the high price that the world is paying for oil. My outlook is I continue to diversify into bonds like this one to gain a good yield in 2022. Stocks are going to be difficult this year. I've sold some of my real estate knowing that, real estate's priced really high right now. And I'm looking for bonds to give me some yield, to give me some performance in 2022. And this is one of the bonds that I've bought into. I'm going to average my purchase into this bond. I initially invested about $8,000, and I'll average in each month into this bond until I build up a bigger position. I'm going to study the oil markets in this company each quarter to make sure that if anything troubling, comes up, I adjust. Or if, my expectation that this company and this industry will continue to really do well for the next, couple of years, I hold steady if I'm seeing that, hey, that's exactly what's happening. All right, so let's revisit my scorecard and score this bond produced by Pemex. First, am I getting a discount on this investment? Absolutely. Getting a good discount, I think, because investors view it as a higher risk. It's, out of the US. But I think the discount is a good one because Pemex is in an industry that's just thriving. So I really like the discount on this bond. The company is operated well, growing well, and producing free cash flow. So that gets a check mark. And is it the right time to buy? Absolutely. I think right now, bonds have really been discounted due to rising interest rates, and picking the right, industries in the right countries, and once you have those lined up, it is a good time to buy. So overall, I believe that Pemex is a good investment, and I'll continue to invest in this company. So just a quick reminder that this video is for entertainment purposes only. I'm not recommending that you buy this bond or any stock or security at all. I like to share my experiences as I invest. In this case, I'm investing in the corporate bond that's provided by Pemex, and I hope you found it interesting. So thank you so much for watching my video. I greatly appreciate it. Please do me a favor and click that like button, consider subscribing to my channel, and click that bell if you'd like to be notified when I produce another video. Thanks again for watching, and good luck investing in 2022.